Based on the provided data, the trend appears to be bearish, with prices declining consistently from February 12 to February 25. The forecast data also suggests a continued downward trend in the coming week. The support price of $67,800 suggests a potential floor for the price, while the resistance price of $92,500 indicates a level that may be difficult to overcome. A potential strategy could involve shorting Bitcoin at the open on February 26 with an entry price of $91,700. The stop-loss price could be set at $92,500, limiting potential losses. The target price could be set at $83,500, based on the forecast data and the historical trend. This strategy takes advantage of the bearish trend and the oversold RSI levels, while using the Bollinger Bands to manage risk. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The support price of $291 acts as a potential floor, while the resistance price of $316 indicates a significant hurdle. Therefore, a bearish strategy is recommended. Enter a short position when the price reaches $296, the first forecast price. Set a stop-loss order at $298 to limit potential losses. Aim for a target price of $269, which aligns with the lowest forecast price. Additionally, consider using the RSI indicator. If the RSI falls below $20, it signals an oversold condition, potentially presenting an opportunity to enter a short position. Monitor the Bollinger Bands. If the price breaks below the lower band, it could further reinforce the bearish outlook. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below the support level of 78 cents in the last week. The forecast data also suggests a continued decline in the coming week. Considering these factors, a short position is recommended. A potential entry price would be around 80 cents, with a stop-loss order placed at 83 cents to limit potential losses. The target price could be set at 65 cents, based on the forecast data and the overall downtrend. This strategy leverages the potential for further price decline and aims to capitalize on the bearish momentum. Based on the provided historical and forecast data, Ethereum appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support price at $2,440 provides a potential buying opportunity, but the resistance price at $2,590 suggests that upward momentum may be limited. Therefore, a conservative strategy would involve entering a long position at the support level of $2,440 with a stop-loss order placed at $2,400 to limit potential losses. The target price could be set at $2,590, representing a potential profit of 2.4%. This strategy takes advantage of the potential for a bounce off the support level while mitigating risk with a tight stop-loss order. Based on the provided historical and forecast data, XRP appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with a forecast indicating further downward movement in the coming week. The RSI, currently hovering around $37.90, suggests that the asset is not oversold, indicating potential for further downside. The Bollinger Bands also support this bearish outlook, with the price consistently trading below the middle band and nearing the lower band. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order set at $2.39, the resistance level. The target price should be $2.19, the lowest forecast price for the coming week. This strategy aims to capitalize on the anticipated downward price movement of XRP. Based on the provided data, Binance Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The support level at $615 has held firm, indicating a potential floor for the price. However, the RSI is currently in oversold territory, suggesting that the price may be due for a rebound. Therefore, a potential strategy would be to enter a long position at the support level of $615. The stop loss should be placed below the recent low of $615 at $600 to limit potential losses. The target price could be set at the resistance level of $647, aiming for a profit of approximately $6%. This strategy leverages the oversold RSI and the potential for a bounce off the support level. Additionally, the Bollinger Band suggests that the price may be nearing the lower band, which could provide further confirmation of a potential buy signal. Based on the provided data, a potential investment strategy for Stellar focuses on a short-term bearish trend. The historical price data shows a downward trend, supported by the forecast data suggesting further price decline. The RSI, while not deeply oversold, hovers around neutral levels, indicating potential for further downward movement. A short position could be initiated at the market price around $0.334, with a stop-loss order placed at $0.312, resistance level. The initial target price would be set at $0.298, the lowest forecast price within the next week. As an additional layer of risk management, the Bollinger Band strategy suggests caution. The price is currently trading near the upper band, indicating potential for a pullback. However, if the price breaks below the lower band, it could signal a stronger downward move, justifying a further reduction of the stop-loss to $0.295. This approach combines trend analysis, technical indicators, and price action to create a potentially profitable short-term trading strategy for Stellar. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further drops. The RSI, while showing some fluctuations, remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction. Considering these factors, a cautious bearish strategy is recommended. A short position can be initiated at the entry price of $3.45, with a stop-loss set at $3.54, the historical support level. The target price should be set at $3.25, based on the forecast data and the overall downtrend. This strategy aims to capitalize on the potential continuation of the downtrend while managing risk with a tight stop-loss. Based on the provided historical and forecast data, Cardano appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests this trend will continue in the coming week. The support price of $0.683 acts as a potential floor for the price, while the resistance price of $0.803 presents a significant hurdle for upward movement. Therefore, a short position strategy is recommended. Enter a short position at the current market price of $0.684. Set a stop-loss order at $0.703 to limit potential losses. The target price for this trade is $0.624, based on the forecast data. This strategy leverages the downtrend and aims to profit from the expected price decline. Based on the historical and forecast data, Litecoin appears to be in a sideways trend with potential for slight upward movement. The support level at $98.40 provides a strong foundation, while the resistance level at $130 might cap gains. A potential entry point could be around $122, slightly below the recent lows and within the historical range. A stop-loss order should be placed at $98.40, protecting against a significant downside move. The initial target price could be set at $130, aiming for a break above the resistance level. The RSI strategy suggests buying when the RSI falls below $20 and selling when it rises above $80. However, the current RSI levels are not in oversold or overbought territory, indicating a neutral sentiment. The Bollinger Band strategy suggests buying when the price moves above the upper band and selling when it moves below the lower band. Considering the recent price action and forecast, a bullish breakout above the upper band around $142 could signal a potential price surge. Ultimately, the most efficient strategy combines the insights from all three approaches, suggesting a cautious approach with a focus on buying around $122, setting a stop loss at $98.40, and aiming for a target price of $130. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price action shows a consistent decline, and the forecast data suggests this trend may continue. The support price of $2.84 acts as a potential floor, while the resistance price of $3.46 presents a significant barrier to upward movement. Considering the RSI, the oversold level of $20 has not been reached recently, indicating that there isn't a strong buying signal based on this indicator alone. However, the Bollinger Band suggests potential price volatility. If the price breaks below the lower Bollinger Band, it could signal a further downward move. A suitable entry point might be around $2.95, with a stop-loss order placed below the recent support level at $2.84. The target price could be set at $2.64, aligning with the forecast data and the downward trend. Based on the provided data, Aptos appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue in the coming week. The RSI indicator is hovering around the neutral level, indicating a lack of strong momentum in either direction. However, the price is trading below the $20 day moving average, further supporting the bearish outlook. Therefore, a short position could be considered. An entry price could be set at $5.69, the forecast price for February 26th, with a stop-loss order placed at $5.81, the high point of the recent consolidation range. The target price could be set at $5.28, the forecast price for March 1st, aiming for a potential profit of approximately 8%. This strategy combines the bearish outlook with the potential for a short-term price decline. Based on the provided historical and forecast data, SE appears to be in an upward trend. The price has been consistently increasing, supported by the rising RSI and the price consistently staying above the support level. The forecast prices also indicate a continued upward movement. Therefore, a bullish strategy is recommended. A potential entry point would be around $0.265, slightly below the predicted high for February 26th. A stop-loss order should be placed at $0.255 to limit potential losses if the price reverses. The initial target price could be set at 29 cents, which represents a significant upward move but remains within the historical range. This strategy leverages the upward trend and the positive forecast, aiming for a substantial profit while managing risk through a defined stop-loss. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, supported by the falling RSI and the price consistently trading below the $20 day moving average. The forecast data further reinforces this downtrend. Therefore, a bearish strategy is recommended. Enter a short position at the market price, which is currently around $18.70. Set a stop-loss order at $19.20 to limit potential losses. The target price is set at $17.30, based on the lower Bollinger Band and the historical support level. This strategy leverages the downtrend and aims to profit from the potential further decline in Ethereum Classic price. Based on the provided data, Polygon appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with support and resistance levels also indicating a bearish sentiment. The forecast data further reinforces this downtrend, projecting a continued decline in price over the next week. Given this analysis, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.273, the predicted high for the next week. The target price should be set at $0.236, based on the predicted low for the week. This strategy leverages the anticipated downtrend and utilizes the support and resistance levels to manage risk. Based on the provided data, AEVO appears to be in a downtrend. The historical price data shows a consistent decline, with the price dropping below key support levels. The forecast data further reinforces this bearish outlook, predicting continued price declines over the next week. Considering these factors, a short position is recommended. Enter a short position at the current market price, which is around $0.132. Set a stop-loss order at $0.139, slightly above the recent high and the support level. This will limit potential losses if the price unexpectedly rebounds. The target price for this trade is $0.107, based on the forecast data and the downtrend. Monitor the RSI and Bollinger Bands closely for confirmation signals. If the RSI falls below $20 or the price breaks below the lower Bollinger Band, it could indicate further downward momentum and justify holding the position. Conversely, if the RSI rises above $80 or the price breaks above the upper Bollinger Band, it may be time to consider closing the position and re-evaluating the market outlook. Based on the provided data, optimism appears to be in a sideways trend with a slight downward bias. The historical data shows price fluctuations around the support level of $1, with occasional touches of the resistance level of $1.09. The RSI indicates a neutral to slightly oversold condition, while the Bollinger Bands suggest a tightening range, hinting at potential volatility. Considering these factors, a conservative strategy would be to enter a long position at $1.01, the lowest predicted price for the upcoming week. The stop-loss order should be placed at $0.998, below the recent support level and the bottom Bollinger Band. The target price can be set at $1.19, based on the recent resistance level and the upper Bollinger Band. This strategy aims to capitalize on potential upward momentum while managing risk by placing a tight stop-loss order. Based on the provided data, STRK appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicator is hovering around the 30s, indicating that the asset is oversold, but the declining trend and support price at $0.198 suggest a potential further drop. Therefore, a cautious bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high of $0.246. The target price should be set at the support level of $0.198. This strategy takes advantage of the potential for further downward movement while mitigating risk with a defined stop-loss. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The RSI indicator is consistently below $50, indicating bearish sentiment, and the price is trading below the $200 day moving average. The support level of $142 provides a potential buying opportunity. A long position could be initiated at the support level of $142 with a stop-loss order placed at $136. The target price could be set at $158, representing a potential upside of 11%. This strategy utilizes the support level as a potential entry point and the RSI indicator to gauge potential overbought or oversold conditions. The stop-loss order helps to limit potential losses, while the target price provides a profit objective. Based on the provided data, Jupiter appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast data suggests this trend may continue. The RSI indicator is hovering around oversold levels, indicating potential for a short-term bounce. However, the price is also approaching the support level of $0.689, which could act as a significant buying opportunity. Therefore, a long position could be initiated at the support level of $0.689 with a stop-loss order placed at $0.669, below the recent lows, and a target price set at $0.725, the next resistance level and a point where the forecast price is slightly higher. This strategy capitalizes on the potential for a short-term bounce while also mitigating risk by setting a tight stop-loss. Based on the provided data, render appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI is currently below $40, indicating oversold conditions, but the price is also approaching the support level of $3.64. Therefore, a potential entry strategy could involve waiting for a bounce off the support level around $3.64. A stop-loss order should be placed below the support level at $3.55 to limit potential losses. The target price could be set at $3.90, representing a potential upside of approximately 7%. This strategy combines the oversold RSI signal with the potential for a bounce-off support. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data further indicates a continuation of this downward movement. The RSI, hovering below $40, suggests oversold conditions, but the consistent decline in price contradicts this. Therefore, a bearish position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.119, the highest forecast price. This stop-loss level provides a buffer against unexpected price surges. The initial target price is set at $0.102, the lowest forecast price. As the trend appears to be downward, a trailing stop-loss strategy can be implemented to lock in profits and minimize potential losses. Monitor the Bollinger Bands for further confirmation of the downtrend. If the price consistently trades below the lower band, it strengthens the bearish outlook. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below key support levels. The forecast data further reinforces this bearish outlook, predicting continued downward movement for the next week. Given this trend, a short position is recommended. A suitable entry price would be around $0.240, with a stop-loss order placed at $0.248 to limit potential losses. The target price for this trade could be set at $0.190, aiming to capitalize on the anticipated decline. The RSI indicator is currently hovering around $28.50, suggesting that Dogecoin is oversold. However, the Bollinger Bands show that the price is still within the lower band, indicating potential for further downward movement. Combining these technical indicators with the overall bearish trend, the short position strategy appears to be the most promising approach. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests this trend will continue. The RSI indicates the asset is oversold, presenting a potential buying opportunity. A long position could be initiated at the support level of $0.0000790, with a stop-loss order placed at $0.0000780 to limit potential losses. The target price could be set at $0.0000820, the first forecast price, aiming for a modest profit. The Bollinger Bands suggest volatility is increasing, which could amplify price movements. The RSI strategy, however, focuses on identifying oversold conditions, providing a more reliable entry point. Therefore, the primary strategy for this trade will be based on the RSI signal, with the stop-loss and target prices as outlined above. Based on the provided historical and forecast data, Shiba Inu appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with support at $0.0000137 and resistance at $0.0000152. The RSI indicator is also below $50, suggesting bearish momentum. The forecast data further supports this downtrend, predicting a decline in price over the next week. Therefore, a bearish strategy is recommended. Enter a short position at the market price when the price reaches $0.0000152. Set a stop-loss order at $0.0000156 to limit potential losses. The target price is $0.0000137, the identified support level. This strategy leverages the downtrend, support level, and bearish RSI reading to potentially generate profits. Based on the provided historical and forecast data for Dog with Hat, a potential position strategy can be implemented. The data suggests a downtrend in the price of Dog with Hat, with the forecast prices indicating further decline in the coming week. Considering this trend, a short position could be initiated. A suitable entry price would be around 55 cents, with a stop-loss order placed at 58 cents to limit potential losses. The target price for this trade could be set at 45 cents, aiming to capitalize on the projected downward movement. Additionally, the RSI indicator shows that the asset is currently oversold, which could potentially signal a short-term rebound. However, the overall downtrend and the forecast prices suggest that the rebound might be limited. The Bollinger Bands indicate a narrowing range, which could suggest a potential breakout in either direction. Given the prevailing downtrend, a breakout below the lower Bollinger Band could further confirm the bearish sentiment and potentially lead to a more significant price decline. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price dipping below the support level of $0.0025 on several occasions. The forecast data further reinforces this bearish outlook, predicting a continued decline in price over the next week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $0.0025. Set a stop-loss order at $0.00286, the recent resistance level. Target a profit at $0.00208, the predicted low point for the next week. This strategy leverages the downtrend and utilizes support and resistance levels as well as the forecast data to maximize potential returns while managing risk. Based on the provided historical and forecast data, Near Protocol appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests continued downward movement. The RSI indicator is currently hovering around the oversold level, suggesting potential for a short-term bounce. However, the overall trend and the forecast data point towards a bearish outlook. Therefore, a short position is recommended. A suitable entry price would be around $3.05, with a stop-loss order placed at $3.15 to limit potential losses. The target price for this trade could be set at $2.75, based on the forecast data and the support level of $2.82. This strategy leverages the downtrend and the oversold RSI condition while incorporating risk management measures. It's important to note that this is just a suggested strategy, and traders should always conduct their own research and risk assessment before making any investment decisions. Based on the provided data, Internet Computer appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI is hovering in the oversold region, indicating potential for a short-term bounce, but the overall trend suggests a bearish outlook. The Bollinger Bands are narrowing, suggesting a potential for increased volatility in the near future. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high of $7.19. The target price can be set at the support level of $4.72, which has held strong in the past. Alternatively, you can set a trailing stop-loss order to protect profits as the price moves down. Remember to manage your risk carefully and consider your overall investment strategy before implementing this trade. Based on the provided data, Injective appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further downward movement. The RSI is currently below $50, indicating bearish sentiment, and the price is trading below its $20 day moving average. A potential entry point for a short position could be at the current price of around $13.90. The stop-loss order should be placed above the recent resistance level at $15.10, limiting potential losses. The initial target price could be set at the next support level around $12.50. However, it's important to consider the Bollinger Bands, which show that the price is approaching the lower band. This suggests potential for a bounce or consolidation. Therefore, a more cautious approach would be to wait for a confirmation signal, such as a bullish crossover of the RSI above $50 or a price rejection at the lower Bollinger Band. In addition, it's crucial to manage risk effectively by setting appropriate position sizes and utilizing stop-loss orders. Based on the historical and forecast data, BTC shows a slightly downward trend. The support price at $350 provides a safety net, while the resistance at $408 suggests potential upside limitations. The RSI oscillates around the neutral level of $50, indicating neither overbought nor oversold conditions. Bollinger Bands show a narrowing trend, suggesting potential price volatility in the near future. Given these factors, a cautious long position could be considered. Enter a long position at $390, with a stop-loss order placed at $350 to limit potential losses. The target price could be set at $408, aiming to capture the potential upside. This strategy leverages the support level and the narrowing Bollinger Bands, anticipating a potential price bounce towards the resistance. Based on the provided data, THETA network appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices further indicate a continued downward movement. The RSI, while fluctuating, remains below $40, suggesting the asset is oversold but not yet at a level to trigger a strong buy signal. The Bollinger Bands also support the downtrend, with the price consistently trading below the middle band and approaching the lower band. Therefore, a bearish strategy is recommended. We can enter a short position at the current market price of $1.17. The stop loss should be placed above the recent resistance level at $1.26 to limit potential losses. The target price can be set at the next significant support level, which is around $0.989 USD based on the forecast data. This strategy capitalizes on the downtrend and aims to profit from the expected price decline. Based on the provided historical and forecast data for WorldCoin, a potential investment strategy could be employed. The price trend suggests a downward movement, supported by the forecast prices, which indicate a decline over the next week. Considering the support and resistance levels, a potential entry point could be around 96 cents, near the predicted low for the week. A stop-loss order could be placed at 92 cents, aiming to limit potential losses. The target price could be set at $1.13, aiming to capture a potential rebound towards the resistance level. This strategy incorporates the RSI indicator, aiming to capitalize on oversold conditions. The RSI levels have been fluctuating around the oversold threshold of $20, suggesting a potential buying opportunity. Furthermore, the Bollinger Bands indicate that the price may be nearing the lower band, which could signal a potential bounce. Combining these technical indicators with the overall price trend and support/resistance levels, this strategy aims to capitalize on a potential short-term price reversal. Based on the provided historical and forecast data, Hooked Protocol appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The support level at $0.176 is a key level to watch. If the price breaks below this level, it could signal further downside. A potential strategy could involve a short position. Enter a short position at the market price around $0.206, close price on February 28. Set a stop-loss order at $0.214, resistance level, to limit potential losses. The target price could be set at $0.165, based on the forecast and the lower Bollinger Band, aiming for a potential profit of approximately $20%. This strategy utilizes the downtrend, support level, and forecast price to identify a potential entry point and manage risk. Based on the provided historical and forecast data, Artificial Superintelligence Alliance appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI, currently below $50, suggests bearish sentiment. We will implement a short position strategy, aiming to profit from the anticipated price decline. Our entry price will be at $0.669, the forecast price for February 26th. The stop loss will be set at $0.687, slightly above the recent high, to limit potential losses. Our target price is $0.559, the identified support level. This strategy leverages the downtrend, bearish RSI, and support level to generate potential profits. Based on the provided data, Polkadot appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is currently below $50, suggesting bearish momentum. The Bollinger Bands are narrowing, indicating a potential for a breakout in either direction, but the overall trend suggests a downside move. Considering these factors, a short position could be considered. A suitable entry price would be around $4.77, the current resistance level. The stop-loss order should be placed above the recent high of $5.05 to limit potential losses. The target price could be set at $4.43, the strong support level identified in the data. This strategy capitalizes on the downtrend and aims to profit from a potential price drop towards the support level. Based on the provided data, Filecoin appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI indicator, while not definitively oversold, hovers around the neutral level, suggesting a lack of strong buying pressure. The Bollinger Bands are narrowing, indicating decreasing volatility, which could precede a decisive break in either direction. Considering these factors, a short position strategy is recommended. Enter a short position at the current market price of $3.41 with a stop-loss order placed at $3.49, the recent resistance level. This stop-loss will limit potential losses if the price unexpectedly rebounds. The target price is set at $2.79, based on the lowest forecast price in the provided data. This strategy aims to capitalize on the perceived downtrend and the potential for further price decline. Based on the historical and forecast data, Conflux appears to be in a short-term downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. Support levels are crucial in this scenario, and the strong support at $0.111 might provide a buying opportunity. A long position could be initiated at the support level of $0.111 with a stop-loss order placed at $0.109 to limit potential losses. The target price for this trade could be set at $0.122, representing a potential upside of approximately 10%. Additionally, the RSI indicator shows that the asset is currently in oversold territory, suggesting a potential for a price rebound. However, the Bollinger Bands indicate that the price is likely to remain within a range, with a potential for further downward movement. Combining these signals, the strategy focuses on buying at the support level with a tight stop-loss and a target price based on the resistance level. This approach aims to capitalize on a potential short-term rebound while managing risk effectively. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI indicator is currently hovering around $40, indicating that the asset is not oversold. However, the Bollinger Bands suggest that the price is moving within the lower band, indicating potential for further downward movement. Therefore, a cautious short position strategy is recommended. Enter a short position at $24.90, the first forecast price. Set a stop-loss order at $25.1, the resistance price, to limit potential losses. The target price is $21.50, the lowest forecast price, aiming for a potential profit of 15%. This strategy combines the bearish trend, RSI indication, and Bollinger Band signal to maximize potential returns while managing risk. Based on the provided historical and forecast data, Avalanche appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. Support levels are holding around $20.1, but the resistance at $23.30 is proving difficult to overcome. Given this trend, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $23.30, above the resistance level. The target price for this trade is $18.80, the lowest predicted price in the forecast data. The RSI indicator supports a short position as it remains below $50, indicating bearish sentiment. The Bollinger Bands are also suggesting a potential downside move, as the price is currently trading near the lower band. While the RSI is not currently oversold, the trend and Bollinger Bands signal a potential for further downward movement. Therefore, the short position based on the overall trend and technical indicators appears to be the most efficient strategy. Based on the provided data, Bitcoin appears to be in a downtrend. The historical prices show a consistent decline over the past 2 weeks, and the forecast data suggests this trend will continue for the next week. The RSI is consistently below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout downwards is more likely. Therefore, a short position is recommended. Enter a short position at the current market price of $0.0282. Set a stop-loss order at $0.0296 to limit potential losses. Target a profit at $0.0257, the lowest predicted price in the forecast data. This strategy utilizes the identified downtrend and the support level to enter a short position with a defined risk and reward. Based on the provided historical and forecast data for PENDLE, a potential investment strategy can be formulated. The price has shown a general downtrend over the past 2 weeks, with a forecast indicating further decline in the coming week. Therefore, a bearish strategy is suggested. A good entry point could be around $3.05, as this price point aligns with the support level and the forecast low. The stop-loss should be placed above the recent high, around $3.14, to limit potential losses. The target price could be set at $2.75, which represents a significant drop from the entry point and aligns with the projected downtrend. To enhance this strategy, we can incorporate RSI and Bollinger Bands. The RSI has been hovering around the neutral level, suggesting a potential for further downward movement. The price is currently trading close to the lower Bollinger Band, indicating potential oversold conditions. Therefore, a short position initiated at $3.05 with a stop-loss at $3.14 and a target price of $2.75 appears to be a viable option. This strategy combines the fundamental analysis of the price trend with technical indicators to maximize potential returns while managing risk effectively. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the forecast data indicating further downward movement. The RSI is currently in oversold territory, suggesting potential for a short-term bounce, but the overall trend remains bearish. Considering these factors, a bearish strategy is recommended. A suitable entry price would be around $0.310, near the forecast low for March 1st. A stop-loss order should be placed at $0.318, slightly above the recent swing high, to limit potential losses. The target price could be set at $0.270, aligning with the broader downtrend and support levels. This strategy leverages the oversold RSI to potentially capture a short-term bounce before selling into the anticipated continuation of the downtrend. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The RSI, while not excessively oversold, is hovering in a range that suggests potential for further downside. The Bollinger Bands are also narrowing, which can indicate a potential breakout in either direction, but given the overall trend, a breakdown below the lower bands seems more likely. Therefore, a bearish strategy is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent resistance level of $0.314. The target price can be set at $0.248, the projected low for the next week, based on the forecast data. This strategy leverages the bearish trend, the oversold RSI, and the potential for a breakout below the lower Bollinger Band. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The RSI indicates oversold conditions, but the price has not yet rebounded, suggesting a potential continuation of the downtrend. The Bollinger Bands are contracting, which could indicate a potential break in either direction. Considering these factors, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high at $0.125. The target price is set at the next support level, which is around $0.0977 based on the forecast data. This strategy aims to capitalize on the potential continuation of the downtrend. Based on the provided data, Uniswap appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator also supports this downtrend, hovering below the neutral level of $50. Therefore, a short position strategy is recommended. Enter a short position at the market price when Uniswap breaks below the support level of $8.02. Set a stop-loss order at $8.99, the nearest resistance level, to limit potential losses. The target price for this trade is $7.41, the lowest predicted price in the forecast data. This strategy capitalizes on the prevailing downtrend and aims to profit from the expected price decline. Based on the provided historical and forecast data, Chainlink appears to be in a downtrend. The price has been consistently declining, with support holding around the $15.30 mark. The forecast suggests this downtrend will continue, with prices potentially falling to $13.50. Therefore, a short position is recommended. A suitable entry price would be around $16, with a stop-loss order placed at $16.50 to limit potential losses. The target price could be set at $13.50, aiming to capture a significant portion of the expected price decline. This strategy leverages the bearish trend and utilizes technical indicators to identify potential entry and exit points. Based on the provided historical and forecast data, Aave appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The RSI is below $50, indicating bearish sentiment, and the price is trading below the $20 day moving average, confirming the downtrend. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed above the recent high of $264. The target price is set at $183, based on the forecast and support level of $192. This strategy aims to capitalize on the ongoing downtrend and potential further decline in Aave price. Based on the provided historical and forecast data, EOS appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level at $0.484 provides a potential floor for the price, while the resistance level at $0.614 acts as a significant hurdle. Considering these factors, a bearish strategy could be implemented. A suitable entry point would be around 58 cents, near the forecast low for the week. The stop-loss order should be placed above the recent swing high at $0.614 to limit potential losses. The target price could be set at $0.484, the identified support level, aiming to capture the full extent of the expected downtrend. This strategy leverages the declining trend and the support/resistance levels to define entry, stop-loss, and target prices. Based on the provided data, Tron appears to be in a consolidation phase with a slight downward bias. The historical price data shows a range-bound movement between the support level of $0.222 and the resistance level of $0.232. The forecast data suggests a further decline in price during the next week. Considering this trend, a bearish strategy could be implemented. We can enter a short position at the market price, which is currently around $0.240. The stop loss should be placed above the recent resistance level at $0.232, limiting potential losses. The target price could be set at the support level of $0.222, aiming for a potential profit of $8%. Combining this with the RSI and Bollinger Bands indicators, we can refine the strategy. The RSI is currently around $50, indicating neither overbought nor oversold conditions. However, a move below $40 could signal further downward momentum. The Bollinger Bands are relatively tight, suggesting a potential breakout in either direction. If the price breaks below the lower Bollinger Band, it could confirm the bearish outlook and strengthen the case for the short position. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI is currently below $50, indicating bearish sentiment, and the price is trading below its $20 day moving average. Therefore, a short position is recommended. Enter a short position at the market price, with a stop-loss order placed at $0.0178, the resistance level, and a target price of $0.0170. This target price is based on the forecast data and the potential for further downside movement. Monitor the RSI closely, as a move above $50 could signal a potential reversal. If the RSI drops below $30, consider adjusting the stop-loss order to a more conservative level. Remember to manage your risk and only invest what you can afford to lose.